Half of XRP's active network users vanished in just 14 days. Not a rumor, not speculation, actual on-chain data. And what's left behind raises a question most people are avoiding right now. Welcome to XRP Future Finance. I'm glad you're here for this one because today we're looking at a number that should matter more to XRP holders than the price candles do. Here's the core of it. Active addresses on the XRP network, the wallets actually sending, receiving, doing something, fell from close to 50,000 down to roughly 25,000, cut in half, inside 2 weeks. That's the kind of move that doesn't get explained away by a quiet weekend or a slow news cycle. Active addresses are basically a pulse check on whether people are using the network, not just holding the token and waiting. When that pulse weakens this fast, it's worth asking what changed and whether it's temporary or the start of something longer. Now, network usage does move around. Every chain sees quieter stretches, busier stretches, nothing unusual about that on its own. What makes this drop different is the size of it. This wasn't a dip, it was the erasing of weeks of accumulated engagement in one stretch. A large share of the people interacting with XRP just a short while ago simply aren't anymore, at least not at the same pace. That's not noise, that's a shift in behavior, and shifts like that tend to come from somewhere. Timing matters here too. This drop-off lines up with XRP's broader struggle to put together a clean recovery after the sell-off back in June. When a token gets hit hard and then can't follow through with strong buying and renewed activity, that combination tends to worry traders more than either signal alone. Price chopping sideways is one thing. Price chopping sideways while fewer people are actually using the network is a different conversation entirely, and it's the one we need to have. But the story isn't one-sided, and this is where it gets genuinely interesting instead of just bearish. XRP's network value to transaction ratio, the NVT, dropped to 199.75 after a 15.29% decline in a single day. Think of NVT like a rough stand-in for a price-to-earnings ratio. It compares the network's total valuation against how much value is actually moving through it. A falling NVT usually means valuation is becoming more grounded in real transaction flow, less detached from it. So pair that with the address drop and you get a strange combination. Fewer wallets are active, yet the transactions happening now carry more relative weight against XRP's valuation. Picture a shop with fewer customers walking in, but the ones who do show up are spending in proportion to the store's size. Both things are true at once, and that tension is exactly why this story isn't a simple "demand is dead" headline. It's messier than that, and messier is usually closer to reality. Don't read that as an all clear though. The improved NVT doesn't cancel out what the address numbers are saying. Overall activity is still well below where it stood 2 weeks back, full stop. A better NVT reading is a useful data point, not a rescue. For real confidence to return, you'd want to see both metrics improving together. Participation climbing back up alongside a healthy NVT. Right now we've got one without the other, and that gap is the thing to keep watching. Moving to exchange flows because this adds another angle to the demand question. The data keeps showing the same pattern, coins leaving exchanges faster than they're arriving. Inflows landed around $39.11 million. Outflows came in higher at about $46.76 million, putting net flow in negative territory. More XRP walked off exchanges than walked on, and that's been the consistent theme, not a one-off. Why care about that? When holders pull tokens off exchanges, it usually points toward parking them somewhere private rather than lining them up to sell. Exchanges are where liquidity lives, so coins draining away from them often signals patience instead of an exit plan. Applied to XRP, this points toward shrinking exchange supply rather than a wave of sellers preparing to dump. It's a quieter, less dramatic signal than headlines tend to imply, but it's a meaningful one if you're trying to read actual holder intent rather than just price noise. And it's not isolated. This negative net flow pattern shows up repeatedly across recent charts, with the occasional deposit spike breaking it up but never reversing the broader trend. That consistency matters. It suggests this is closer to a deliberate behavior among holders than random fluctuation. Layer that next to the NVT shift from a minute ago, and the picture starts looking less like panic and more like a market quietly repositioning while everyone's distracted by the address numbers. Now let's get into price, because this is where it all gets tested. XRP is trading near $1.13 after losing the $1.30 support level earlier this month, and losing a level like that isn't cosmetic. It tends to flip the broader tone of a chart from hopeful to defensive. Overhead, Resistance sits around $1.37, with a tougher wall waiting near 1.50. Both levels need to fall before bulls can claim they're actually back in control. The indicators back up the cautious read for now. On the directional movement index, the negative reading sits at 27.21 against a positive reading of just 20.47. When negative stays above positive like that, sellers are still effectively running the show, regardless of short bounces along the way. It's a clear enough gap that it shouldn't be ignored just because price has stabilized a bit recently. There's also the ADX, sitting at 27.10, which measures how strong the current trend is regardless of direction. That reading says the existing, bearish-leaning trend still has real force behind it, not fading conviction. The one thing working in XRP's favor here is that price is held above the $1.09 support zone. That level has functioned like a floor so far, and as long as buyers keep showing up there, the door stays open for a push back toward those resistance levels above. Put plainly, hold 1.09, and a run at 1.37 then 1.50 becomes realistic. Lose it, and the bearish trend the indicators are flagging gets room to extend further. Sellers are still in charge of the bigger picture right now. That's just where the data sits. But support holding is exactly the kind of detail that can flip a setup like this if buyers keep defending it over the coming sessions. So here's where everything lands. Network participation took a real hit, cut in half in 2 weeks, and that's a legitimate flag on demand. At the same time, price keeps defending that 1.09 zone. Exchange flows lean toward accumulation rather than selling, and the NVT ratio suggests valuation is staying grounded rather than inflated. None of that erases the fact that sellers still hold the technical edge. It just means the full story is more layered than one falling chart can show. Watch 1.09 below and 1.37 above. Those two levels will likely tell you which direction this resolves in. If this kind of breakdown is useful to you, stick around, subscribe to XRP Future Finance, and I'll catch you in the next one.